let's get a sense of what are going to be the big factors, because the news flow is coming inwards, I would say, for the next few days. And Santosh Rao, head of research partner at Manhattan Venture Partners, is with us this morning. Mr. Rao, great to have you on NDTV Profit and speak with you.
Great to be here.
Yeah.
Yeah, absolutely.
I mean, I'm sure you've been glued to the debate, so I'm going to start with that. It's been a very, very tight race if you look at the polls so far, you know, almost a photo finish between Trump and Harris. Do you think those scales are tilting post the debate?
I mean, I was listening to the debate. I just cut off. It's still going on. This debate was as expected. There's a little bit of you said, she said kind of thing going on. I think Trump kind of was okay, was more constrained. She held her own, so that's a good sign. So, I don't think this will decide anything. They both stake their claim there. It'll be down the road now. The last stretch, the home stretch, is which will decide what's going on. At this point, there are different what do you call the ratings are different in terms of the economy and the immigration and few other, which are important things right now. The livelihood, the cost of living, and all that. I think Trump wins outright. He's going to reduce taxes and all those things, and that's very business friendly. She's more on the social side. She says she's going to do everything that pretty much what Trump is going to do. She's going to reverse what Biden was doing. So I think she still has to claim that nobody knows what she's doing yet. But I think she'll expand on that. This debate was a good start for her, but I think down the road. So I would say it's still 50-50 with a slight edge to Trump at this point, just given the importance of immigration and the economy at this point of the cycle.
Santosh, hi, good morning. It's also Samina joining in. So we've got no major triggers apart from, of course, elections. And the big one, that's the Fed rate cut, which some may argue is already priced into the markets. Over the next 4 to 6 weeks, do you feel like it's going to be a directional trade for global equity markets or for risk on? And maybe there'll be opportunities where the markets may see dips, which could potentially get bought into.
Yeah, I mean, I can talk about the US. Yes, the 25 basis points is priced in. But we saw today, JP Morgan, the CEO, talked about how the banking sector took a hit. They're saying the consumer, the customer is slowing down. The credit card debts are up, margins are down. So the banks, the financials took a big hit. So definitely air of slowdown is in the, I mean, the move towards slowdown is definitely happening. So the only issue now is 25 basis now. He can't do 50 because that's going to send too many alarm signals. He's going to do 25. The next issue is whether it's going to be 100 basis points for the full year. That is like 25. 75 left, so 25, 25, 25. So is that going to happen, or is just going to do 25, 50, and 25? So we don't know what combination of that. He's going to be data dependent. So, but I think keeping in mind, he's already said that the inflation is not an issue. It's on a glide path to 2%, his target. So he's not worried about inflation. It's really the labor market that he's worried about. If things really slow down and if layoffs pick up and things like that, I think that's going to be an issue. So still at this point, it's going to be, I'm in the camp of safe landing. And I think that's where it's heading right now. I think so. If that happens, we're fine. We'll just ride out this one, and then I think it'll go up. But as the interest rates come down, I think that's great for the emerging markets, for the outflows. I mean, India especially, you're going to see a lot of outflows. The dollar weakening, that helps the emerging markets. So all those things are net positive for the emerging markets and other areas. But US, I think a slowdown, a soft landing is what we're looking for. So net, everyone will be happy if we have a soft landing. But let's wait and see. There's a geopolitical tension going on. Oil prices are down. That's reflecting that. So all those things are playing into this also. So a lot of cross currents at this point looks like.
Did I hear you say India is going to see a lot of outflows?
No, inflows.
Inflows.
To
okay,
you.
fine. Okay,
yeah,
great.
Yeah. The dollar weakening and interest rates coming down, it's going to help you out there and other emerging markets.
Perfect.
So
one more question. Do you reckon this crude price fall, and independent of whether it's at 69, 70 or 75, but at those levels, It's indicative of recessionary winds. A normal price fall is welcome. This is indicative of some bit of demand concerns. Is that still a big net positive for emerging markets, oil importing emerging markets like India? Or would you reckon recessionary fears far outweigh the gains from a crude price fall?
Yeah, I think that's not clear yet. I think talk of recession is picking up, especially after today, what JP Morgan said and what the CEO said, that the consumer is what was who was holding up the economy. I think through all this turmoil, the consumer was still buying, though he was going down the value chain, but he was still buying. That was holding up. The job market was still holding up. But I think if we start seeing cracks in that area, I think recession will pick up. But at this point, there is no talk of recession. We are definitely slowing down. How much slowdown is a big issue at this point. Let's wait and see. The CPI data coming out tomorrow, I think that's going to, hopefully that's not a hot number and that will continue the glide path down to 2%. But it's really the jobs number, which will come be after the Fed meeting. And then before the following Fed meeting, we'll see where that goes. But at this point, things look like the pillars are still holding on, though they're wobbling here and there, but they're still holding on pretty well. The oil prices is a tax on the people. If oil prices, well, right now it's good, it's beneficial, it's coming down, but we want it to come down for the right reason, not because the recessionary fears and all that. Right now there's oversupply, the demand is slow. China is really the culprit there because they have slowed down. So that's what's happening here in the US. That's still okay.
Santosh, just a quick one. Basic economics. We saw that when Alan Greenspan did it, we saw when Bernanke did it, and now, of course, Fed chief. It's you give a rate cut or you talk about a rate cut when an economy is slowing down. We've known this all along. What suddenly changed 5 days ago is what I can't get my head around. Earnings, largely for Wall Street companies, have beaten street expectations. So why are we suddenly waking up and smelling the coffee? Is this because, in my opinion, I just feel like we've bought into this rumor for so long now that maybe it's time to take profits off the table, which is healthy investing and trading, you'd imagine, right?
Yes, it's time to take it off, but it's still a stock picker's market. You have to be selectively going into different areas. I would continue. You saw Oracle's numbers; they're still great. So the old tech is doing very well. The new tech is kind of selectively doing well. So yeah, take profits as needed. But I think the reason we need to bring down, if I understand your question right, the reason the rates need to come down is the gap between their neutral rate, which is roughly around, I think, 2.8 to 3%, and what the Fed funds rate is at 5.25. That's a big gap. That deficit, that increase, I think he needs to close that, and he can afford to close that. That's more, he doesn't need to be restrictive now. The economy is restrictive enough. That was his big issue. So he needs to bring it down, but bring it down slowly to a normal level. And he'll do that. And meanwhile, it's a stock picker's market. You just go in. AI is still at play. Cloud is still at play. So I would just go in there. I mean, like you said, the earnings are good, the projected to be good, though there's slight slowdown. So I would stay in the market, definitely, and 60-40 is back in play. You can make money in the bond market as well, selectively. You can make money in the stock market. So it's all around, it's good news, not a bad news yet, but let's see what the dark clouds, will they just pass out or will they cause some happiness?
You're right, Santosh. Markets usually ahead of the real economy, so we will see where we go in the next couple of months. But thank you for joining us this morning.
You.